Welcome to the Crypto Podcast. You can find all our episodes on thecryptopodcast.org. We're also on BitChute and YouTube. You'll find the links in the podcast description. I for other podcasts, The Awakening, Learn Polish, the meditation and the speaking, as well as being a podcasting coach. You can find everything on roycon.com. Today, my guest, based in the UK, please welcome Phil Blows.
Pleasure to be here. Thanks for having me.
No problem at all. So you might let the audience know. Who's Phil?
So Phil is the co-founder of a company called AQRU. We're a listed crypto business that specialises on giving people the highest yields on their digital assets. So customers transfer Bitcoin, Ethereum, and sort of stable coins to us. We pay them between 12 and 7% interest on those. And we started the business about 18 months ago. We've been growing at a pretty crazy pace, and we're on that kind of crazy scale up journey at the moment. So it's been quite the ride.
So I know that you've kind of went from 0 to 10,000 customers in something like 4 months, which is incredible. So you might tell me that journey.
Yeah, so we had a bit of, we talk about kind of overnight successes and things which often have a fairly large backstory and a lot of blood, sweat and tears in the background. So really the journey started back in kind of 2020, where we identified that there was this opportunity where you could earn very, very high yields by lending out your digital assets or, to a lot of different counterparties with, a reasonable degree of risk. However, the mechanism by which you did that was incredibly complicated. So I think I've spent my career looking at how do we make sort of financial services more consumable, easier to use, safer, those sorts of things. This slotted quite nicely into that space. And having done some testing with friends and family, we launched the business, we raised money very quickly and actually listed as a public company very quickly. So did what's called a SPAC. And in the process kind of raised 11 million in the first 10 months of the business. We kind of just hit a real sweet spot. We designed a product that customers love. We had a good marketing and go-to-market strategy. And really what that meant was once we got our first few hundred customers, they referred hundreds who referred hundreds. And that's kind of why we've, with all that kind of work in the background, that's how we've then ended up with this amazing kind of growth rate. And, we're kind of still growing around about 100% a month. It's kind of just hit a real need right now in a world where there's nowhere to get yield on any assets, and crypto's a hot space as well as that. So it seems to have just ticked a lot of boxes for a lot of investors, both retail and institutional.
Excellent. And that's an incredible growth that you're getting. And I know that when somebody opens up, you're given something like $10, and then there's kind of like a referral system, which I'm sure, obviously, it has to be worth your while because you've looked at the true value of a customer. And, that obviously you can get some people just take the small amount and just base it on that, but they've worked. So like, that's kind of the marketing strategy. That's the main thing for you, basically.
Yeah, the $10 was quite important, I think. And I was what we wanted to do with the user's experience was make it as easy as possible for them to see how the app worked. So the idea is that you only need like an email and a password. And, what that means is you land on the app and instantly you can see we've invested kind of $10 into our stablecoin product for you. So immediately having logged in, you can see that your money is kind of earning in real time and your $10 balance is increasing in real time. And I think that was very much designed to kind of give the user the ability just to play around with the tool from day one. And also to have a bit more confidence to see the mechanism, because what we wanted to avoid was users testing us out with $10. It's almost actually operationally more efficient for us just to give them $10 and let them play around than it is to have them put $10 in and then scale up for their second deposit. So the kind of behavior we've seen that's encouraged is people, they get familiar because they can see how it works with the first $10, and then they just, they let it, their second deposit then is much larger. Obviously incentivizing people to refer customers has always been a good strategy. And we've built a great community. We've got probably 20,000 customers across our social channels now who are really, really active in terms of providing feedback. So we learn a lot from customers. and we'll continue to do so, I think, with the kind of feedback that we're getting and the growth that we're seeing.
Excellent. And with this system then, because obviously if you log money in, can you do it with like debit credit card, or must you use a wallet system? Because I mean, I'm just learning that it's hard to kind of educate people. You know, there's the fear factor. Obviously, there's the people that understand the crypto, but there's a lot that don't. What way does your system work? Do you have to have a wallet?
So yeah, it's a really good point, because for most people, you know, the idea of having, and this goes back to that initial kind of founding idea, the idea that you have to have your own wallet and connect it into the crypto system before you can get started, you know, discounts a huge proportion of the population. You know, probably 90% of people. And, you know, having come from traditional finance, I know how hard it is to get people to engage with traditional investment platforms, let alone investment platforms in crypto. So it's really important from day one to provide, you know, ways of getting normal money onto the platform. So anyone can deposit euros or GBP and other currencies coming, either via a bank deposit, which is completely free, and then convert that into crypto again, which is completely free. There's no transaction cost for that. Or they can use a debit card. And you know, one thing I'd say about the debit card route at the moment is it's more expensive. So it's on the platform, but we are working with a lot of providers to try and get the cost down, because the way it works is you deposit you know, your normal currency, but you purchase it, and then we get delivered the crypto on the other side. But you know, it can probably turn out to be around sort of 4% or so as a fee, which you know, so we really encourage people to use the bank transfer feature, because it's, you know, your bank's not charging you anything on the whole, and we're not charging you anything. You know, we don't make any money out of the card payments either. It's all our suppliers, but they're just, as it happens at the moment, there's no really efficient way to get card payments onto crypto platforms without there being quite a lot of cost. So you know, hopefully people are comfortable with the bank transfer solution, which, you know, we're seeing a lot of volume through that channel. So hopefully that's showing that customers are comfortable doing it.
And it's kind of, you know, the blockchain technology and the crypto that I would love to see more using, because, you know, you mentioned about the fees they charge. Most of them, Visa, MasterCard, even PayPal, sometimes it's like 7% they're taking. They're fleecing people. And absolutely. I was talking to somebody the other day, they were on about some guy had done $1 billion transaction with Bitcoin, and it was something like $2 or something. It was very, you know, that is unreal. And I remember talking to somebody years ago, asking him, he was the main dealer for Ferrari. And I was like, are they taking 3% of that? And it was like, yeah. And I was like, you know, that's unbelievable that they've got away with that for so many years.
Well, I mean, if you look at the main card providers, you know, they've got it's increased over time. Their profit margins are increasing over time as they're kind of getting more of that. I guess that they've got greater market share. It's higher barriers to entry in that traditional finance space, but they're looking at 30-40% profit margins on their entire business. You know, which is why they're such valuable companies, and they've built amazing businesses. But you know, it's a cost. You know, a transaction cost is almost friction on day-to-day commerce. So trying to reduce that is really important. You know, the value of a lot of these payment businesses is basically value that's being taken away from small businesses, and you know, value that's being taken away from consumers getting good returns on their investment. So it's really important to have a fairer and, you know, less centralized economic system, that we reduce this sort of transactional friction. And as you mentioned, it's a great example. Yeah, I could send you $1 billion worth of Bitcoin.
Do please.
Oh, well, yeah. If I had it, you know, I'd be doing this from the Bahamas probably. But you know, it's but it would cost, as you say, a couple of dollars. It would take 5 minutes probably to get over to you, which isn't ideal. You know, we want it to be instant. And there are other blockchains outside of Bitcoin where it's a lot more instantaneous, the transactions. But yeah, it's a more efficient way of moving value around the you know, the world. And you know, the time zones. And one thing we don't talk about is, if I was sending money from, well, to be honest, from the UK to Poland, you know, at the moment you'd probably use a provider who makes the journey a lot smoother by sort of leveraging their balance sheet, and it probably would look fairly instantaneous. But what's actually happening in the background is, you know, you're going through kind of SWIFT mechanisms and things like that, which are taking days to transact. because a lot of banking infrastructure is on this really legacy, old tech. So again, blockchain tech, and that's one area we talk about crypto, but it's actually the technology that underpins it, has the ability to make the financial system so much more, scalable and efficient if we can, get larger institutions to start adopting it.
But it's brilliant that you're actually, you're trying to save people money, because it's amazing to me the amount of people that actually aren't aware of the fees that some of them are charged. Even say the likes of Ryanair and Amazon and all that, they'll kind of, they'll allow you to use their currency provider. And if you actually check the rates, they're fleecing people.
Yeah, and I think it comes back. I spent 4 years at another fintech, and what we were building there was kind of software to try and help people better manage their day-to-day finances, and then hopefully get them from the position of being in debt to actually saving money and planning for retirement and that sort of thing, and really trying to improve the financial well-being of people. And as part of that project, I actually ran around the UK, probably spoke to around about 10,000 people over 4 years, where I was just taking them through the tool and showing them what it was and sort of talking them through the results. And yeah, it was a massive eye-opener, first of all, around how disengaged most people are in their finances and don't pay attention to these small fees, which really build up. But also, like, depressingly, just how bad a situation most people are in with their money. The average pension pot at the point of retirement in the UK is something around £60,000. You're talking about retirement incomes of like £10,000. It's like, it's just not gonna, a lot of people will never be able to stop working. The younger generation is kind of pretty disengaged from traditional finance, which is actually why they're moving to things like crypto and NFTs and things like that to look for more exciting returns. So yeah, it's against a slightly depressing landscape. People need to engage more with their finances, and I think that's why we're seeing so much interest in kind of alternative asset classes now, because people are getting tired of being fleeced, of not getting the returns they're after, and feeling kind of cut off or sort of excluded from the traditional sort of savings world.
Yeah, and I know that with the pension, because when I was working in Ireland, I had full contribution. And you get this report basically telling you when it goes up 6%, it'll be worth this. When it goes up 8%, it'll be worth this. And every year it's the same amount, and it's still telling you the same thing. And sometimes it goes down. Even when the markets are going through the roof, it's like might go up a small bit. And I've talked to some people that have big funds, and it's kind of the same. And it seems to be the same in most countries. Is that something, because like the interest rates that you're providing, I think from just what I've looked at, it's kind of 7 to 12%. If I could get 12% on my pension fund, I would be so happy. Is that something that is possible?
At the moment, no. So I mean, the way pension assets are generally ring fenced in terms of what they can invest in. So traditional kind of securities, stocks, bonds, that sort of thing. Obviously, bonds at the moment, and most people are unaware of what their pensions is invested in, and by default there will be a default selection which will generally put you in sort of 50, well, say depending on your age, 25 to 30% bonds and the rest in equities. And at the moment, the 25 to 30% that's sitting in bonds is probably losing you 8% a year to inflation. And what you put into equity, depending on what it's in, is also probably not performing very well. So you've got these, long term, hopefully that changes, but obviously over the last few years, it's not been a good portfolio to really be in. It hasn't really provided much growth. So I think there's a big push to be able to invest in digital assets through your pension, and indeed there are options which you can look at. So there are things like Bitcoin ETFs or these sorts of things where they are exchange traded securities, which means that if the platform that your pension provider is with, will allow the selection, you can legally invest your pension into these sorts of products, which will, they'll mirror the price of Bitcoin, albeit in quite an expensive way. So unfortunately, at the moment, there's no yield product that's really available in a kind of a tax efficient wrapper like a pension or an ISA in the UK. But hopefully it's coming. And we want to be on the forefront of that, because we're looking at solutions that are bringing the world of decentralized finance, the world of yield generation to the everyday consumer, and doing it in a safe and sustainable way. So hopefully that will feed through pretty quickly.
That'd be great if that happened. And I see that you use Moonpay. I haven't heard about that. You might explain a bit about that.
So Moonpay are one of these card providers that I mentioned, who effectively you use them to, if someone wants to pay on a credit card with our account in sort of any of a lot of different currencies, they can they do a card process. So they'll they put in their card details. They then select which crypto they want to send to AQRU. So what it'll probably be is, just say I've got US dollars, I want to invest in Bitcoin. And so Bitcoin then eventually gets added to their AQRU account. So it's this alternative provider, which allows everything to happen via a card. The only downside to that is the cost, but obviously it gives you a lot of flexibility. So if you're coming from a country which we don't host, or we don't support the, the underlying currency, then obviously it's a good option to have. But it's to say it is expensive, but hopefully these costs are coming down as a lot more providers are entering the space. Visa, we've talked about being expensive. Often, they are expensive, but they're not as expensive as what we see in kind of traditional, but in non-traditional sort of card providers. So as they enter the market, as they are, hopefully that'll bring costs down for the consumer.
Okay, excellent. And just you mentioned companies, so I think you're originally UK based, but I see you've got something in Bulgaria, and have you something in Lithuania as well?
So yeah, in terms of how our company is structured, we are a publicly listed company in the UK, trading on the Aquis exchange, and that's effectively we are a big incubator of businesses. So we've invested in 9 businesses, and 7 of which are in kind of the DeFi space that we have a partial stake in, 2 of which are wholly owned. And one of those wholly owned businesses is AQRU, and that is based out of either Bulgaria or Lithuania, depending on the region that you're transacting from. And the reason for that is we've got authorization in those 2 territories to be a licensed crypto business, or what's called a VASP, or a virtual asset services provider. And that's where the kind of regulatory hub is for each one for that AQRU business. So we are talking to the regulators in the UK to try and continually add more jurisdictions, and also in Ireland. We have a Fintech license in Canada as well, and we're constantly looking and speaking to a lot of different regulators globally, try and have a very robust sort of regulatory footprint for the whole business, because it's an emerging market in terms of, or asset class. So there's a lot of kind of regulatory asymmetry around the globe, and really what we need to do as a business is try and just do whatever we can to engage with regulators in a sensible way to make sure that they're kind of supporting our business. But yeah, on top of that as well, we've got a great team, customer service team in Bulgaria. So a lot of crypto businesses set up businesses there. So you've got this enormous pool of really, really well-educated, incredibly crypto savvy individuals who are great employees that we can hire. And if you ever download our app, there'll be an intercom there, and just ask a question. They're there to educate, to help, and to answer any questions. And yeah, we get amazing feedback on them, because they're such a proactive and helpful team.
Excellent. And you mentioned about the regulation. Like if you've got money in a bank, I think depending on the country, I think in Ireland and most of them, it's like say €100,000 that you're protected. So if you're looking at the bigger, so obviously the small investors is not going to matter. So 1, is there a limit to the amount you can invest in your system? And 2, for the bigger boys, how much is their protection?
So yeah, it's a really good question. We in terms of the upper limit, there isn't one. We have some very, very big investors, both institutional and retail. In terms of the protection in the world of crypto, it's a little bit different. So what your biggest exposure is that the assets are effectively hacked and stolen. And you read about these hacks that happen. And rewind to kind of 2008, the original time when Bitcoin was first mined, and it was really a very, very kind of tech focused community of of developers who that you needed to be a developer in order to safely safeguard your assets, because it was kind of the Wild West. Nowadays what we have is, we use a company called Fireblocks. They are kind of a bank level custody and wallet provider. So all the assets that we have are stored in Fireblocks, and they have a $30 million insurance policy attached to them against hacking. And they've done over $2 trillion worth of digital asset transfers, and they're a pretty tried and tested platform in the space, and dealt with dozens of banks and other kind of big providers such as ourselves. So that's one of our main concerns, is how do we build the most robust, secure platform for storing digital assets? And we've done that in conjunction with Fireblocks and through the other security measures that we've taken. So we have insurance, and it's it's obviously a very useful thing to have. And I think that's given a lot of our current institutional customers a lot of faith in the business, and they're happy to place pretty large and significant sums of assets with us on the back of that.
Excellent. And like I've seen the different, you've the stable coins. Have you plans for kind of bringing in other coins? Because it's like Ethereum, Bitcoin, like, I mean, I don't know how many at this stage, 8,000 or something like that. But have you a system for kind of vetting and making sure that it's, it works in your system?
Yeah. So, I mean, what's really, having spoken about that kind of experience previously around sort of doing the research on the everyday user, I look at the number one earner, the top paid executive in the UK last year worked for a gaming company, right? Who's only makes money when gamblers lose money, and which is not having a positive impact on the financial health of the workforce. And the majority of trading platforms that you see have to have a disclaimer at the bottom saying, look, 80% of customers lose money or lose their entire account balance within kind of 3 months, all these horrible risk points, because they are providing a product that's kind of detrimental to overall financial health. My number one priority is, we talk about safety, but it's like the safety of the customer and providing a service that is going to make them wealthier. That's what so everything we're doing, there's only so much we can do. If the price of Bitcoin collapses, then that's sort of out of our control. But everything we're doing is around trying to tip the balance in favor of the customer. So we're trying not to get customers trading, because we know people who trade, they buy the top, they sell the bottom. It's panic and greed, it's the usual stuff. So we're looking for longer term crypto investors. And the long answer to you, so this is sort of the long answer to your question, which is what we need to do is have ultimate faith in any asset that we put onto the platform. And it's like, so we are going through an amazing amount of vetting of any asset. And I want to be able to say that I believe any asset on our platform is still going to be here in 5, 10, 15 years. And at the moment you've got Bitcoin and Ethereum, and the stable coins, they are there. That I think they've got a great track record, and they've got a great future ahead of them. It's just looking at what's the next one, and that's more difficult than you would have thought. But that's not to say there's some amazing projects out there that we're really keen to list. So it might be that there is a way of, can we maybe have an institutional offering which uses more coins in the short term, and then depending on how that goes, roll them out to retail investors. Because I'm just aware that because we've taken this very simplistic approach to to make a simple, easy to understand product, we've probably attracted a more sort of a less experienced crypto investor. So we need to protect them. And I think one way to protect them is to make sure the assets that we hold are slightly more limited than you get on other exchanges. Because every other exchange, they'll have hundreds of assets because they make their money out of you buying and selling all as aggressively as you possibly can. That's not our business model. We take a percentage of the yield that's generated for our customers. And so we make money when our customers make money. And so I want to keep it that way. I want to keep our interest aligned with our customers, and be very much on their side.
Yeah, no, I love that model, because I know of other systems, and they're best, as you say, when they're doing the trade, they're giving X amount. I know of one person, and basically they were just constantly trading and showing the person's money was going down based on the market, and they were making a fortune. And you have to have ethics. And I mean, like I just looked at a few videos with your thing, and I look at the different people involved in the company, and I think you can kind of pick up on the energy, and you can see the people, and even just listening to you talking about the people in Bulgaria, it's kind of, you care, and you're aware of, there's most of them out there are out to kind of take the money out of your pocket instead of a win-win situation, because obviously you're making a percentage as well, which is great. And, you know, it's in your interest to give as much as possible, because then people will invest more and they'll tell 10 of their friends. And I love that model, to be honest, which I think it's fantastic.
That's it. It's a longer term focus. Like, you know, we've obviously, there's been some amazingly successful exchanges that are out there, but it's like, I've seen it all before. You know, I haven't got too many gray hairs, but I do know enough that, like, you know, I've seen people lose millions of pounds trying to trade the markets, and it's such a small percentage of people who do it consistently well that, you know, the majority of people, it's like, it's generally buy and hold or dollar cost average, you know, investments over the long term is the way most people make money, and actually outperform most traders and most professional fund managers. So it's like, just by doing the basics right, you're beating 99% of people. So that's, you know, everything that we're doing is trying to encourage that kind of activity.
Excellent. I'm just curious about, like, say, NFTs, because I'm really researching that at the moment. I'm actually setting up something with that. Is that something that you're looking at, or are you staying away from that?
Well, I think NFTs are really interesting. And you know, there's a huge market that's exploding in the space. You know, I think you compare it to like the early days of crypto, of the, you know, traditional cryptocurrency, in that, you know, what it is now probably isn't what it's going to be in 5-10 years. So we'll see how it develops. But, you know, what I'm really interested in how the technology can be used, and like the concept, the kind of fractionalized ownership. So when you think about the sort of thing it does, I mean, the example I always use is, just imagine you know, you're a wealthy investor and you've got a Monet painting sitting on a wall somewhere, you know, and you've decided, look, I don't want to sell it particularly, but I'd kind of like rent it out for a bit, you know, and maybe use it for something. So you could take that Monet and you could effectively fractionalize it, you know, turn it into 10,000 NFTs, which you could then say to the market, well, I've got this NFT now, 10,000 NFTs, and you can either lend them to people or sell them to people, or you could say, look, I will lodge these with you as collateral and you can borrow against it. So all of a sudden you've still got the picture on your wall, but you've released a load of collateral, a load of sort of value into the system, which you can kind of borrow against that. So all of a sudden that, you know, that Monet painting that maybe is, you know, your hope is going to appreciate over time, suddenly is able to generate yield, and, you know, it becomes a more productive asset. You can do that with literally anything, you know, whether it's, you know, houses, or, you know, I've had a friend of mine do it with racehorses, you know, real world racehorses. He took 10 racehorses and fractionalized them and sold them, and, you know, removed a lot of the admin around owning a racehorse, which was a fascinating way of doing it. And, you know, it's these kind of new markets that are going to come out of that kind of changing the way we own and, you know, prove ownership in products. I think that's going to be amazing. And, you know, as a business that is on the forefront of, you know, how do we generate yield on digital assets, you know, and I think the team that we have in place is probably one of the best teams in the world at generating yield on digital assets. And we're going to continue to resource the team and, you know, hire people who fulfill that objective. So I have no doubt that NFTs will play a big part in that strategy in the future.
Excellent. And I see you're a certified blockchain expert by the Blockchain Council, which sounds impressive. I've never come across it before, so you might let me know. First of all, who's the council and how do they make you an expert?
Well, I think it's really just a case of, you know, there's a lot of looking for kind of, you know, regulatory bodies within the space, and there are, you know, a number of kind of organizations really, and fewer kind of regulatory councils trying to have a benchmarking standard that you need to go through. So, you know, really that all that is a, you know, it's a sort of a couple, like a month-long sort of exam and sort of lecturing sort of process that you go through, and have an exam, multiple exams throughout the process. If you pass them to a certain level, you get the, you know, the qualification as you would with anything else. I think, you know, there's always you know, there's a lot of like legitimizing and kind of standardization that's probably needed in digital assets. You know, how do we ensure the counterparties, if they're going to be decentralized, that's fine, you know, and we don't necessarily know who they are or who owns them, but, how do we know they are up to par? So there's some great auditors in the business, companies like QuantStamp, that they give a lot of these DeFi companies their stamp of approval, having reviewed the code base and things like that. And there's more of those. Is there something we can do? That's for code. What about operational, or the team that sits behind it? Are there kind of decentralized ways of validating that people are who they are and that are going to do what they say they're going to do? I think that's another area of the market that we're going to see a lot of growth in.
Excellent. And just like with wallets and exchanges, which ones would you recommend?
Now, it's not an easy answer, because there's this big thing around, not your keys, not your coins, which is like, as in, if it's not a wallet where you own the secret phrases, then it belongs to an exchange, and that's absolutely true. But at the same time, the majority of hacks that happened last year, or the majority of the money that went missing last year, happened from sort of dApps or decentralized apps around the world. They didn't come from exchanges. So the people who kind of put money into those apps were the ones who had a wallet and connected that wallet to these decentralized apps. So I think how the market has moved on, as I said, I can understand that not your keys, not your coins concept, 5 years ago, when, a lot of exchanges were being hacked. You didn't, it was a bit still the Wild West. But now when you've got, exchange, AQRU is owned by a listed business. Who runs the company, it's got good operational standards. We use Fireblocks, which is an insurance policy on the wallets. You have none of that if you use your own wallet. You are completely in charge of the security yourself. And most people don't take that very seriously. So they don't use a hardware wallet to sort of like, put an extra layer of code on, say, a MetaMask, extra layer of security, on a MetaMask wallet. So I think for that reason, it's like, if you're doing the self-custody element yourself and you're doing it properly, great. Most people aren't. Most people are really opening themselves up to loads of risks. So I think for the vast majority, they should go with an exchange, because it's easier and you're basically relying on the exchange's operations and infrastructure. Okay.
And I know you're an author as well, The Money Triangle, and I believe the proceeds were going to charity.
Yeah, so it's The Money Triangle has been a book. It was a book I wrote on the back of that kind of tour of the UK, which is you're just trying to condense all of the learnings from speaking to people into like a coherent structure. And really, it was just breaking down people's finances into, their spending habits, their saving habits, but then also like, how to get them just to earn that little bit more. Because really, it's without those three in balance, financial health is a bit of a pipe dream. So, it's just giving some really nice, what I tried to do was bring out stories from people, so in kind of the savings sector, there's a story about, Walmart employees who managed to, become millionaires based on just their own stock program, living pretty much on minimum wage, just above minimum wage. And, on the spending it, looking at kind of like lottery winners who blew it all, and, lessons to be learned there. And yeah,
I believe it's 80%, is it? Or that win the lottery end up going bankrupt?
Wouldn't surprise me. It's a really fascinating. And I actually know someone who's aiming to do a podcast in that space, was, to do the lottery winner plus 5 years, and just try and find every lottery winner 5 years later to see how they're doing and interview them.
Yeah, I'm
not sure if we actually kicked it off, but yeah, it wouldn't surprise me. These big kind of life events have pretty unforeseen consequences, and don't often lead to the kind of happiness that people might think. It's an interesting sort of life event, that one.
And the proceeds, the profits go to charity. Yeah.
Exactly. So it's a financial education charity. So a company called Red Start, who does a lot of financial education in schools and things like that. We put money into that, and just try and make sure that any other kind of decent charities get support as when we see them. Because a lot of financial habits are learned sort of before the age of like 13. So, and even younger. So, the younger you can get people to think about saving and, and not just frivolous spending, the better. So, trying to effectively put classes in place that enable that to happen.
Excellent. And yeah, I know that the adults need to be paying attention, because most of them, if you have your money in the bank, it's probably losing money. If you're lucky to, 0.1%, but when you take inflation into account, it's you're in the negative. So I mean, like, at the end of the day, what you're doing is I love it, to be honest with you, because it's accrued daily. Yeah, that it's not a case of you put the money in and you can't take it out for 6 months or something like that. It's like I can take it out again tomorrow if I want.
Exactly that. Yeah, take it out whenever you want. That was the idea. Make it as flexible as you can. Yeah.
And I know from loads of investments that I've done over the years and just investigating loads, most of them, they try to tie you into something so that your money, and nobody knows, there's hiccups along the road, something can happen, and it's great to know that you can actually take it out. So I think what you're doing is excellent.
Thank you very much. Thank you. Appreciate that. So
Phil, you might let people know how they can get in contact with you.
So I mean, probably the best way is, AQRU.io, AQRU.io. We're obviously on the App Store and Android Store as well. All of the questions you ask the customer service team via the app is, I get asked, and I review regularly. Staying in touch with investors and customers is one of the most important jobs I have, and responding to their queries and what they need us to do next. I'm on LinkedIn a lot as well, so Philip Blows there, or Phil Blows, I think I'm there. Just reach out, any questions, feedback. Again, love to hear it, and I get quite a lot of people contact me directly. Two of which actually ended up working for us. So yeah, there's love hearing from people directly. So please reach out.
Okay, perfect. Yeah, I'll make sure I put the links both on the audio and the video. So thank you very much, Phil.
Appreciate it. Thanks so much, Roy.
So that's all for the Crypto Podcast. You'll find all our episodes on the cryptopodcast.org. As mentioned, we're on BitChute and YouTube. Be sure to give us a thumbs up, 5-star rating, subscribe. It all helps. Until next week, take care.